Welcome to Global Risk Community Chat. Today, our guest is Richard Dooley. I'm very happy to have you here today, Richard. Welcome.
Well, thank you for having me. I really appreciate the invite and looking forward to the conversation.
Likewise. So, before we get into our conversation, our topic, can you briefly introduce yourself to our audience?
Yeah, sure. Rich Dooley. I'm here on the East Coast of the United States. I am a treasury management sales consultant for a large regional bank here in the United States. We're primarily focused in the southeastern part of the country, but we have a reach pretty much throughout the nation. And I focus on working with large corporate clients, particularly in the commercial real estate space, as well as the healthcare real estate space, but other large corporate areas as well.
Sounds good. So, with that being said, then what topic you would like to share with us today?
So the topic that I want to share with you is an important topic and one that I deal with on a daily basis in my work, and that's B2B payment risk. So obviously I work with a lot of clients that are making payments, receiving payments. There's a lot of parties involved, and there are risks around these type of payments, and we've seen that in the industry for a long time. And it really takes a lot of vigilance on our corporate clients' part, really, to make sure that they have the proper protections in place. They're educating their staff on different risks. And the thing about it is, Ajay, the bad guys are very innovative. So as innovative as we are on the good side with new payment types and risk management procedures and tools, unfortunately, the bad guys are pretty innovative as well. So when we make strides in one area, they typically go for another area, and that's what we see. And we help our clients obviously protect themselves the best that we can. We have certain products and solutions. We obviously consult with our clients, and so there's a lot of talk about this, and we're always looking to reduce the amount of fraud. The good news is that seems to be happening, but it's a continued fight all the time.
Well, sounds like a very interesting and also very important topic for, I assume, our audience as well, because a lot of them are also, in this field as well. So, with that being said, then what would be some key things that you can share regarding, like this risk or fraud? Like, what are some, how does it happen? What are some
Sure.
ways to, maybe prevent it and so on?
Yep. Well, that's a great question because really preventing it is key. So let me go over some quick statistics. So the Association for Financial Professionals is the largest trade industry organization really in treasury management. And they do surveys every year. And they've come out with some statistics recently. And the good news is that, as I mentioned before, I'm just reading some of these stats now, we see incidences of fraud going down. Now, there's two particular areas of B2B payments where we see a lot of fraud. One is check, typically. The old paper check that is still around that companies use. Every company uses the checks to some degree or another, as well as ACH. A little bit less so, we've seen fraud in wire, and I'll talk a little bit about that, as well as like commercial card or virtual card usage. So some clients are using a credit card to pay their vendors, things like that. We do see some fraud in that area. But the good thing is that in 2021, and this is the last year that we have full statistics, checks and ACH were the payment types most impacted by fraud, but less and less organizations are seeing this fraud, and check usage is actually going down. The good news is that there's a projection for this year that B2B customers will probably only use about, in their overall payment scheme, probably about 30% of checks. So there's been more vigilance amongst our corporate clients, but they're also using checks less, which obviously leads to less fraud, which is good. On the ACH side, what ends up happening is bad guys will somehow steal a corporate client's account, their account number, and they'll send what's called an ACH debit, which is essentially them reaching into a client's account or a corporate's account and pulling money out. There's two ways to particularly prevent that through tools that banks provide our clients. One is called Positive Pay, which is basically corporate will send us a file of all their checks that they've written, and we'll send that file back when those checks start to clear. They look at those checks electronically, and if something looks wrong, they say that they'll stop that one or this one or this one, And that's one way to prevent fraud. Similar on the ACH side. So when somebody is trying to reach into their account to pull money out via ACH, again, we're sending them a file that say, here are the ACH payments that are coming through. If these don't look right, put a stop to that and you can avoid the fraud. And that's a couple ways our corporate clients have utilized bank solutions to reduce fraud. One of the other key areas over the last several years is something called business email compromise. So this is where the bad guys, and it's interesting. So let's put ourselves in a situation, actually, where you're a corporate and you're the CEO and I'm the CFO. Okay. So a bad guy will come in and somehow get into our system and they will watch the email correspondence between you and me. And they'll get a sense of how we communicate. They don't always do this, but often they do. And then you as the CEO will be out somewhere. You'll be on a trip, you'll be somewhere, and then you will send me an email that says, I've come across this opportunity. It's hugely important. I need you to wire $1 million to this account right away because we have to act really quickly. Now that sounds pretty brazen and simple to fight. However, it happens often because what ends up happening is the bad guys get in there and they're able to create a fake email basically that gets into the system. They're plugging it into the corporate system and then it goes through. And then the CFO or the controller or the AP person gets that email and it looks very, very, it looks very real. It looks like it really did come from the CEO. And so they act on it. And you'd be surprised at how many people act on that and don't check. What's very interesting, and I get some emails now as a banker, we get these. If you look at an email address, sometimes you'll see that there's one letter, just one little letter off, or an additional letter. Looks like the exact email, but there's one additional letter or some kind of symbol, maybe it's a number or something. Very, very hard to recognize, and most people don't look at that. And then what happens is that is acted on. It can also happen where a bad guy is impersonating a vendor of a corporate client, right? So let's say you're a corporate, you use me as a vendor, you typically pay me once a month or whatever. And all of a sudden you get an email from me that says, hey, we've changed our banking account information. Please use this bank account information going forward to pay our invoices. And then so all of a sudden you say, that's fine, that's great, no problem. That next month, you send that $10 or $20 or $50,000 payment to the vendor. You think it's your vendor, and it's gone out and it's gone. And 2 weeks later, the real vendor, I call you and say, you didn't pay your invoice. We're still waiting for that invoice to be paid. You're 2 weeks late. You go back and say, wait a minute, I paid that. But what ended up happening is you received a business email compromise email, and it was a fraudulent email, and you sent payment out to some account somewhere. And that happens often. The good news is that those incidences are going down. And one of the reasons why is because corporates have done a pretty good job of becoming more vigilant and also training their employees to watch out for these things, to scrutinize those emails. If something doesn't look right, then you have to act on it. What corporates are doing now more too is that they're actually making that phone call. These things sound common, but it doesn't often happen. So you get that email in from your vendor. It's a change of bank account information. It's kind of coming out of nowhere. Don't call the phone number in the email. Go into your Outlook contacts or whatever, get that phone number that you've called 20 times in the past and make the phone call and say, are you actually changing your bank account information? Oftentimes, and this has happened, where that vendor will say, no, we're not doing anything like that. Or they may confirm it, say, yes, we actually are. But now you've actually confirmed it via a phone call or a chat of somehow. So you've taken that extra step, and it's a simple risk management step if you think about it. But that's how you often avoid larger incidences of fraud. But it still happens. We see it. We get these things sometimes on a weekly basis. I just had a colleague from a former bank shot me an email to say, hey, not my bank, but their bank had a client that fell prey to one of these compromises, and they actually sent the wire to our bank. So we were trying to help them figure it out, but it still happens. Even with all these risk management methods, it still does happen. So it's a vigilance. It's obviously using the bank products and solutions that are geared towards risk management and avoiding these things. But it's also a lot of vigilance. You just have to be very careful, train your employees, and pay a lot of attention. So those are some of the instances that we see that happen often, and we're fighting with our corporate clients or for them to help them avoid these kind of things.
Thank you for sharing that as well. Actually, when you were mentioned with like being vigilant or calling, I was even myself thinking like, why aren't they just calling? Of course, sometimes they don't,
Right.
but still always good
Well,
to think.
they're so busy oftentimes, accounts payable departments particularly, and that is the one group in the corporate world that very often falls prey to these situations, because that's where the money comes out of.
Yes.
And they're very busy. They're often short-staffed. They have a lot of things to do. So they got 25 things on their task list for the day. They get a quick email in. They don't pay attention to it enough. And then all of a sudden a payment goes out via wire or ACH or a card even maybe. And now those dollars are usually gone, particularly with wires. As a bank, if we are informed of that fraud when it happens, we do everything we can to try to get those dollars back. And sometimes we can be successful. We don't guarantee it. We can't do that. But oftentimes the dollars are gone, especially if it goes to a foreign bank. That's when it becomes very difficult to get dollars back. And so, the best way to avoid these things is to stop it before it happens.
Indeed. Well, you have shared a lot of valuable information also, like more insight on how exactly it happens as an example. And I did hear some takeaway points, being vigilant, training employees. But if you were to share one last takeaway, very simple, what would that be?
Yeah, it's a great question. Vigilance is key, right? You just have to pay attention, utilize the solutions available. But I would also add this. The B2B payments world is evolving very fast. So the consumer payments world has been very innovative. That innovation is starting to step into the B2B payments world. And we have now new payment types or payment rails. For example, real-time payments is actually out in the market now. And that's a credit push system. So we think there will be less fraud in those areas going forward. It's new. So we're kind of waiting to find more statistics and see how it all goes. But my point is, corporates need to understand what's happening in the B2B payments world. They need to pay attention, because these new payment rails and new payment methods maybe can reduce fraud, but also they're out there in the marketplace and you got to know what they are. So if your competitors are using these new payment methods and you're not, you might be left behind. So vigilance, utilize the solutions that are offered in the marketplace, and pay attention to the innovations that are in the marketplace in the B2B payments world, because they're changing the landscape, and typically for the better. So there's a lot going on, a lot to pay attention to. And these are the things that we work with our corporate clients on and try to advise them on, and looking to just make things better and safer, of course, and create better risk profiles for everybody.
Yes. Thank you for sharing that. It was, I think, overall very valuable, very in-depth, as well as in-depth as it can go in a short period of time like this. But with that being said, unfortunately, we have run out of our time. So I want to thank you so much for joining us today, sharing about this topic. I don't think many people talk about this topic, but a lot of our audience actually do work in corporate. So this is something they should definitely also look into. So thank you so much.
It's my pleasure. Thanks for having me. It's an important topic, so I really appreciate you allowing me to cover it.
Of course. Have a great day.
You too. Thank you.